President Trump has unleashed a tidal wave of economic changes in just the last few months. We've seen mass deportations around the country, to the biggest tax cuts in the history of America, to spending billions of dollars on space exploration. Each one of these changes do two things. First, some people get very emotional. Second, some people get very rich. My goal is for you to be a part of the second category, because in my firm, Briefs Pro, we have a team of analysts that are studying shifts that are happening in the economy, and one of the things that we've talked about and published many times is what we call this government shift. Changes in government policy and how that creates investment opportunity. So my goal for you in this video is to talk about how these changes in Trump's economic policies create an investment opportunity for you by focusing on 5 things. Number 1, I want to talk about deportations. Number 2, I want to talk about changes with SUVs and machinery. Number 3, how changes in space exploration can create opportunities. Number 4, how tariffs create investment opportunity. And number 5, how investment into the defense sector can create some potential investment profit opportunity. Some of the things I'm going to show you will make you feel a little uncomfortable. But what we say at Briefs Pro is that good investment makes 3 types of sense. Number 1, it makes legal sense. Number 2, it makes financial sense. And number 3, it makes moral sense. I'm not going to be the judge of your moral compass. It's going to be up to you to decide what makes moral sense for you. And with that, I also want to remind you that I'm just a random guy on YouTube. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. And when I go over specific examples, these are for example purposes only. On July 4th, President Trump signed the One Big Beautiful Bill Act into law. Most people are hyper-focused on the tax cuts in this bill, which, by the way, I made a video covering these tax cuts. If you haven't seen that video yet, I will link it for you down in the description. But this bill is also allocating billions of dollars into ramping up deportations faster than ever before. Read this. The legislation makes ICE the largest federal law enforcement agency, giving it $45 billion for building new detention centers, in addition to $14 billion for deportation operations. Why does this matter? Because this means detention centers, like private prisons, will be receiving more money from the government to fund these operations. 2 of the largest private prison stocks in the United States are CoreCivic and Geo Group, and both of those stocks popped as soon as this bill was passed, because Wall Street knows that when the government spends more money on mass deportations, private prisons make more money as well. So you bet that this is something that Wall Street is keeping their eye on. Maybe you want to as well. This brings me to number 2, a very interesting one. SUVs and machinery. By the way, if you want to stay up to date on what's happening in the financial markets when it's happening, my team at Briefs Media also publishes a free daily report called Market Briefs, where we break down what's happening in the economy, housing, stocks, crypto, and global markets into a fun, witty, and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every morning, and when you join Market Briefs, you're also going to get my investing masterclass as a complimentary bonus, where I'll walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. This is all completely free. So if you want to get Market Briefs plus my investing masterclass, all you have to do is click the link down in the description below. President Trump's new tax bill expanded Section 179 by adding in 100% bonus depreciation. As an attorney, who's not your attorney, who keeps a copy of the federal income tax code in his office, I can tell you that this is going to make some big changes in how businesses spend money. And I'm going to keep this very simple, so if you're confused by this, stick with me for 30 seconds. This Section 179 in the tax code allows businesses to take a write-off when a business spends money on machinery or equipment for the business. So if I'm a business and I spend $100,000 buying machinery, I get a write-off. The problem is, before this, I don't get to write off all $100,000 today. I might have to write off $20,000 this year, then $20,000 the year after that, then $20,000 the year after that, which means if I spend $100 grand today, I don't get that full write-off right now. This changes that. This 100% bonus depreciation allows certain business owners to take a 100% write-off on that spending today. Now, for the purposes of this video, let's make this even more fun, because this Section 179 can also apply to heavy vehicles. So you're a business. You go out and you want to buy a $100,000 heavy vehicle. Now, you buy this $100,000 heavy vehicle by putting $20,000 down. You put $20,000 out of your bank account to buy this $100,000 vehicle, but you get a $100,000 tax write-off today. So you only spent 20 grand today, but you get the full $100,000 write-off, which means you can take this tax write-off and offset the other business income. The last time we saw this 100% bonus depreciation was when Trump was in the White House in his first term, and we saw G-Wagon sales skyrocket during the time because a G-Wagon is a heavy vehicle. Some small business owners were buying G-Wagons as a business expense and then writing it off. So will we see a surge in business owners buying G-Wagons to take advantage of this 100% bonus depreciation? Maybe. Last time, the difference between then and now is last time we were around the pandemic time, there was a lot of free money floating around. That free money is gone today, so maybe business owners will be more cautious with their money. But chances are we will see more businesses invest money into heavy machinery and certain vehicles to grow their business because they're going to be able to take advantage of this 100% bonus depreciation. Why? Because the business gets a tax write-off while they're growing the business. That could potentially benefit companies like Caterpillar and of course John Deere, who are producing the heavy machinery that businesses can use to help grow their business. This brings me to number 3. Space exploration and investment into space, which apparently is a very interesting topic for a lot of wealthy people. In January 2025, President Trump signed the Iron Dome for America. This order allocated a lot of federal money for space exploration. But then President Trump took it one step further. In the new tax proposal that President Trump signed on July 4th, in that proposal, there were billions of dollars allocated into building up and beefing up our Space Force. That means companies in the United States that also trade on the stock market could be getting more contracts and bigger contracts for the governments if they're producing boosters, rockets, and satellites to help boost the United States space presence. Now, if you're wondering which companies and which stocks, there are dozens of stocks that you can analyze here that go beyond the scope of this video, but if you just do a quick Google search, you will see dozens of companies and ETFs that could give you exposure to the companies that may be benefiting from the more money going here. But the one thing that I want to caution you on and make sure we're on the same page about is these are shifts that are happening. We know that the government is allocating more money into these places. However, just because a company or a stock operates in one of these industries doesn't guarantee that that stock is going to benefit, because sometimes that stock is going to be run by a bad CEO. Sometimes that stock, that company is going to have bad cash flow management. Sometimes that company is going to be very non-innovative. And this is why your success as an investor isn't just by looking at the research and picking a random stock, it's by doing the research, finding where the money is moving, and then analyzing the individual stock as well to make sure, hey, I like one of these shifts, but I also like the company here because this company is innovating. This company is growing. They have a good CEO. They have a good team. They have good values. And I think this company is going to be worth a whole lot more money and making bigger profits in the future. That's the question you want to be asking as an investor. And this now brings me to the fourth point, which has to do with tariffs. It's not news that President Trump has unleashed a wave of tariffs on countries around the world. And nobody can really predict which tariffs are going to be here to stay, which ones are going to be cut, and how much, except maybe one type of tariff. Tariffs on steel and tariffs on aluminum. How can I be so sure? Well, I'm not. But President Trump did pass tariffs on steel and aluminum when he was first president in 2018. And then during President Trump's second term, the steel and aluminum tariffs were one of the first tariffs to get passed because President Trump said it was a national security threat if American companies were relying on foreign countries for steel and aluminum. And then to top it off in 2025, the White House has raised tariffs on steel and aluminum multiple times just this year. What these tariffs on steel and aluminum effectively mean is if you're a business in the United States and you need metal, well, you can buy that metal from an American company or from a foreign company. And if you're buying it from a foreign company, well, now it just got a whole lot more expensive because there's tariffs on this foreign steel, on this foreign aluminum. So these tariffs are essentially working to eliminate the foreign competition for the United States aluminum and steel companies, which means if you're an American company and you want to buy steel or aluminum, it's effectively less expensive to buy those metals from an American company as opposed to a foreign company, and that could create opportunities for these American manufacturers and producers and sellers of these metals, assuming they're actually producing those products in the United States. And the reason why I say it like that is because there are some metal producers like Alcoa, which is a metal provider in the United States. However, they're getting a big chunk of their metals from Canada, which means now, even though it's an American company, they have to pay a tariff when they import those metals from Canada into the United States, so they might not be benefiting because they're still producing those products from a foreign country. So you bet this is something that Wall Street has their eye on, because if those tariffs are here to stay, that could potentially benefit the companies that are producing these metals in the United States. And this brings me to number 5. let's talk about what's going on with defense, which is arguably one of the most talked about areas. During many of these tariff negotiations, President Trump negotiated that many of these foreign countries are required to buy more arms, weaponry from American companies. What does that mean? If these foreign countries are buying more guns, more ammunition, more tanks, more planes from companies in the United States, that means more money, in theory, should flow from these foreign countries into the United States, more specifically into those companies that are producing those arms. But that's not all. When President Trump signed this new tax proposal into law, another line item in that tax proposal allocated billions of additional dollars being allocated towards defense spending in the United States. Again, that means that the United States government would be buying more ammo, more guns, more tanks, more aircrafts from United States private companies. And many of these private companies that are producing these arms are publicly traded stocks, which means anybody can invest in those companies. Which means in theory, those defense companies could be receiving more contracts or bigger contracts from the United States government. And like I mentioned earlier, there's a lot of companies in this space. So if you're wondering which stocks could be impacted, just do a quick Google search and you will see some of the stocks or ETFs that are involved in this space. Again, not every company is going to win just because more money is going into this shift. Some companies are going to get more contracts. Some companies are going to get less contracts. Some companies are going to be better run than others, which is why you have to do your research. Now that you understand these shifts, there's one more thing that I want you to understand. Investing is risky. You've heard me talk about this before. And even though, based off of the information we have today, these shifts look like they're going to be getting more money, there's always risks. There's risks that things could change. Economic policies could change. A recession could happen. A market crash could happen. All of these things can impact these in a negative way. Or we could see geopolitical issues that can also impact some of these in a negative way, others in a positive way. This is why, again, your job as an investor is to understand what is your goal. For many people, the easiest and simplest way to start is just to put your money into the stock market. Something like the S&P 500, something like the total stock market. Because now you don't have to worry about researching specific companies or specific shifts. You're just buying into the future of the economy. For some of you who want to be more involved, this is where now you can take a look at what I call market shifts. Again, we're not talking about trading, we're talking about investing for the long term. I call this active investing. This is one type of market shift. I call this a government shift. Again, my team at Briefs Pro publishes these types of shifts every single week. But this is where, now, if that's something that you're interested in, not only do you want to look at where the money is moving, but you also want to pay attention to the companies. Because now you want to research, is this company that I'm investing in actually a good company? Is it managed well? Is their cash managed well? Do they have a good CEO? Are they innovating? And then you take that risk that maybe something goes wrong. But if you do it right, because you're taking on more risk, you could also see much bigger return. That's why investing is risky. And you don't want to invest more than you're willing to lose, but you want to understand how the investing game works, because what Wall Street is doing is when they hear these changes happening, when they hear how money is moving, they're not getting political, they're not getting emotional, they're not getting argumentative. What they're asking is, where is the money moving? And then they're looking at things like this, and that's how they allocate their money. So my goal with this video is to help you to understand how Wall Street invests their money. That way you can be a smarter investor. If you got value out of this video, the best thank you is to share this video with a friend or a colleague to help spread this financial education. And again, if you'd like more, Market Briefs is a free resource. I have that link for you down in the description. President Trump signed the One Big Beautiful Bill Act into law. This big bill will bring some big changes to our economy, starting with some big tax breaks to big funding for certain things like more deportations. And the reason why you want to pay attention to this bill is because it goes into effect retroactively. It goes into effect January 1, 2025.